Welcome back. You're still tuned into Power Breakfast here on CNBC TV 18. We are now joined by our research team. They'll tell us how the trade setup is looking, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. What is the market setup looking like today?
Well, a little bit of a risk-off across the global markets. As you've been pointing out, Jerome Powell's very hawkish rhetoric has rattled the risk sentiment across Wall Street overnight, where the key indices were down anywhere between 1.25% going up to a 1.7% downfall for the Dow Jones. So US markets were under pressure. Asian markets are trading with weakness, and even the SGX Nifty, if you compare it with Monday's March futures close of 17,790, it is indicating a bit of a downbeat start. The key takeaway is that the ultimate peak rate is going to be higher than longer. It's higher than what they were earlier anticipating, and also the Fed is prepared to now increase the pace of rate hikes. So basically the window for a 50 basis points rate hike in the next Fed meet is now on the table. The Indian markets had two good days on the trot, both Friday and on Monday. On Monday, though, the markets went to levels of 17,800, but it did retrace from there to ultimately end just about that 17,700 mark. The resistance from now here on will be the 50-day moving average, which is 17,855, and also 17,880, which is the 38.2% retracement of the recent correction from the all-time high levels of 18,888 to the recent low of last week, 17,255. Both the institutions on Monday bought in the cash market. Between the FIs and the DIs, we had nearly about 1,500 crores bought. The DIs bought 750 crore, while the FIs net bought 721 crores. So today, Indian markets could have a bit of a gap down opening given the risk-off sentiment across the global markets. But we've had two good days on the trot, so let's see whether the bulls will claw back. Back to you.
Oh, yes, absolutely. Thank you so much, Rima, for joining us with those market cues. Now, over to Surbhi. A lot of stocks that will be in focus as well. She has that list. Surbhi?
Hi, good morning. Thanks for that. So, a few stocks that are on my radar today. Adani Group continues to be in focus as they prepay 7,374 crores of shares-backed financing ahead of its maturity of April 2025. Next is Power Grid, where the board approves two investments, one worth 524 crores to Eastern Region Expansion Scheme, which is expected to be completed by November 2025, and the other investment of 3,547 crores towards a wind energy project, which is expected to be completed in November 2024. Next is Vardhman Special Steels. The company partners with Toyota's global supply chain to start mass production of steel. All Cargo Logistics. The company consolidates its position in contract logistics business by buying out partners' stake of 38.87%, and also the board approves exit from non-core clearance business. And lastly, Sun Pharma. The company completes acquisition of Concert Pharma.
Thank you, Surbhi, for that list. And finally, Mangalam is joining in with all the cues from the F&O space this morning. Hey, Mangalam.
Good morning. So, on Monday, we had a great trading session, though the Nifty was mildly off highs. And now we are at an important juncture. The Nifty closed at 17,711 and the 20-day moving average is 17,701. So for all practical purposes, we are at the 20-day moving average, and the start, as the SGX Nifty is indicating, would be below that. So on the way up, that will be something that we'll watch out for immediately. The SGX Nifty at an optical level are down 131 points, but you have to adjust it for the Monday futures close. 17,774 is what the futures close was. So to that extent, the SGX Nifty is currently indicating a cut of just around 40 to 50 points. There was strong institutional participation on Monday. Both the FIs and DIs bought together 1,400 odd crores. But in index futures, the short covering continued. Both Nifty as well as the Nifty Bank saw open interest contraction, and the data confirmed that 1,500 crore worth purchased by the FIIs in index futures, of which 16,000 contracts on the short side were unwound, a few long positions added. Now the FII longs are 26%, while they're still net short. Remember, last week the longs were just around 15%. So after two strong days, the longs have inched up as well. They've covered some short positions in index options as well. Both long calls as well as short calls as well as short puts have been unwound. We saw unwinding at the 17,600 call. Those who had written that call after a big up move on the Nifty had to cover those positions. But we continue to see some writing at the 17,800 call and the 17,700 put. So the 17,800 call has a premium of around 25 odd rupees, and the 17,700 put has a premium of 50 odd rupees. So those who are playing for expiry tomorrow are playing for a range anywhere between 17,625 to 17,855. 17,855 important because it's also the 50-day moving average on the Nifty, and the Nifty Bank has rejected the 50-day moving average at 41,673. So it will be important to see where it goes from here as well. Support seen around 17,625 to 17,650.
Okay, all right. Thank you, Mangalam, Reema and Surbi for joining us. That's our setup for the trading day today. Let's slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned.